Today, we're diving into one of the most ambitious climate policies anywhere on the planet, the European Union's emissions trading system. You can think of it as this giant real-world experiment that uses the power of the market to fight climate change. So let's get right into it.
But everything really starts with this one fundamental question. If a factory's pollution harms the environment, who actually foots the bill for that damage? For the longest time, the answer was, well, nobody. That cost was just pushed onto all of us, onto society. So how do you fix that? How do you actually make polluters pay?
Okay, so here's a quick look at what we're going to cover. We'll kick things off with the big idea of putting a price on pollution, then get into the economic theory behind it all. We'll look at how this carbon market actually works, check out the system's features as they are today, and then we'll wrap it all up with a balanced look at its successes and its criticisms. So let's start with the main idea here. The EU ETS, which actually launched way back in 2005, was the world's very first major carbon market, and it's still the biggest. The goal is incredibly simple, really. Make it expensive to emit carbon dioxide.
Now, this isn't just about some environmental ideal, it's straight out of an economics textbook. It's what's known as a market-based solution, and it's designed to solve a classic economic problem called a negative externality. Basically, it forces companies to pay for the environmental damage they cause, to internalize that cost, and factor it into their business decisions.
To really get why a system like this is even necessary, we have to talk a little bit about the theory. Why is pollution considered an economic problem and not just an environmental one? Well, it all comes down to a concept called market failure.
And that specific type of market failure has a name, a negative externality of production. This is such a key concept. It happens when making something, say electricity from a coal plant, creates side effect costs like air pollution and climate damage. Those costs are paid by everyone else, a third party, not just the power company or the people buying the electricity.
And this diagram shows the problem perfectly. Take a look at the lower line, labeled MPC. That's the marginal private cost. It's the direct cost for a company to produce something. But see that higher line, MSC? That's the marginal social cost, the true cost to society, which includes all those hidden pollution costs. Now, the free market, if you just leave it alone, will produce at quantity Q. But the best, most efficient level for society is actually way back at Q star. That gap between them, that's the market failure. We're getting way too much pollution.
So that's the problem. How do you fix it? How do you close that gap between the private cost and the social cost? Well, the EU's answer was to create a whole new market, basically from scratch, a market for the right to pollute. This is what we call a cap-and-trade system.
And it's called cap and trade for a very good reason. First, the government sets a hard limit, or a cap, on the total amount of pollution allowed. Then, second, it lets companies trade permits to pollute within that cap. This dynamic is what creates a price for carbon and gives companies a real financial reason to clean up their act.
Let's break it down into 3 simple steps. First, the EU decides on a strict, total limit for emissions across the bloc. That's the cap. Second, that total is chopped up into a fixed number of permits, where each permit allows you to emit 1 ton of CO2. And third, these permits are then put into the market. And here's the clever part. If you're a company that invests in clean technology, you can sell your extra permits for a profit. But if you're a big polluter, you're forced to go out and buy more permits, and that hits your bottom line.
And this diagram shows exactly how the carbon price gets set. See that vertical line S? That's the supply of permits. It's totally fixed by the government's cap at quantity Q1. It doesn't move no matter what the price is. So that means the price is determined entirely by demand. If the economy is growing and companies need to pollute more, demand shifts out from D1 to D2, and boom, the price of a permit shoots up from P1 to P2. The market itself discovers the price of carbon.
All right, that's the theory covered. So now let's talk about what the EU ETS actually looks like in practice today. This system has changed a lot over the years, and the current phase, which runs from 2021 to 2030, is by far its most ambitious one yet.
So the most important thing to know is that the cap on emissions is not static. It gets tighter every single year, shrinking by 4.3% annually. The system's also getting bigger, expanding to cover sectors like aviation and maritime shipping. There's even a whole new system called ETS2 coming for buildings and road transport. And to stop companies from just moving their polluting factories overseas, what's called carbon leakage, the EU introduced a carbon border tax, or CBAM. And finally, to smooth out those price swings, there's something called a market stability reserve.
Let's zoom in on CBAM for a second, because this is a real game changer. Imagine you're a steel company in Europe and you have to pay this high carbon price.
What's to stop a competitor in another country with no carbon price from just selling cheaper steel and putting you out of business? Well, until now, nothing. CBAM changes that. It's basically a tariff on carbon-intensive imports like steel and cement. It levels the playing field.
Of course, no policy this huge is ever going to be perfect. So for a fair evaluation, we really have to look at both sides of the coin. What's worked really well and what are some of the biggest criticisms?
Okay, so on the success side, you've got real, measurable decarbonization, you've got what economists call allocative efficiency, and it generates a ton of revenue for green tech. But on the flip side, the system's been criticized for price volatility, the risk of carbon leakage, and the fact that higher costs can really hit lower-income families the hardest.
Let's start with the headline success, and it's a big one. It is really hard to argue with this number. Since the system started back in 2005, emissions from the power plants and factories covered by the ETS have been slashed by nearly half. That is a massive achievement, and it proves the core idea actually works. And the benefits go beyond just cutting emissions. The sale of all these carbon permits has generated over 250 billion euros. And this isn't just a tax that disappears. It's basically become a massive investment fund for the green transition, paying for everything from R&D in green hydrogen to helping heavy industry modernize their factories. But here's maybe the biggest challenge. Just look at these wild price swings. In 2017, a permit cost just 5 euros. By 2023, the price had skyrocketed to nearly 100 euros, before settling down around 65. For a business trying to make a multi-billion-dollar decision about a new factory, that kind of volatility makes planning for the future incredibly difficult. And there are two other really important criticisms. First, companies don't just eat these extra costs, they pass them on to you and me through higher electricity bills and higher prices for goods. This can be regressive, meaning it hurts lower-income households disproportionately. Second, for years, to prevent them from leaving Europe, many polluters got their permits for free. This kind of weakened the whole polluter pays principle, but thankfully, these free allowances are now being phased out.
So after all that, where do things stand? Well, it's clear the EU ETS isn't some static, finished policy. The best way to think about it is as a constantly evolving tool, one that's being fine-tuned and improved in real time. So really, what's the big takeaway here? The EU ETS is just this fascinating, powerful example of economic theory being put into practice. It proves that market-based ideas can be a really effective weapon in the fight against climate change. But it's not a silver bullet. It's an ongoing experiment, always adapting to the messy realities of politics and economics. It's a work in progress.
And that leaves us with a huge question for the future. As this system continues to grow and adapt, can it actually become the blueprint for how the rest of the world tackles climate change? I guess only time will tell.